It's that time of the year when budget expectations occupy center stage for Indian markets. Unlike last year, this year, Indian markets are approaching the budget with a positive frame of mind. So what exactly Indian markets want from Union Budget 2013, and what can the finance minister do to jumpstart the Indian economy? Let's discuss that with three of the finest stock market experts. On my left side, Jyoti Vardhan Jaipuria, Bank of America Merrill Lynch, Nirmal Jain, Chairman IFL, and then Nandan Chakravarti of Axis Capital. And thank you for joining us. Jyoti, let me kickstart the discussion with you. Do you think this time's budget is more like a no event? Because the finance minister clearly has indicated that he will table a responsible budget, and also he has already alluded to the FY14 fiscal deficit number. Do you think the cat is already out of the bag?
See, in some sense, yes, but it is, you got the number. Now the how behind the number is important. That how does he really achieve that number and without affecting growth. In fact, everybody looking to him to help growth from the budget rather than hurt growth. So obviously there will be spending cuts. The key is whether he can have those spending cuts without really hurting growth.
Nirmal, what is your sense?
Whatever this government has done in the last 3-4 months, which is, the steps include like railway fare hike, or diesel price increase, or cut down in subsidy on LPG. So these are all non-populist measures. So I think despite election approaching next year, it looks like the government is determined that I think the reforms cannot be ignored now. India's credit rating was threatened. The things have really gone out of control. So it looks like that it will be a responsible budget, because I think government has been taking responsible steps in the last 3 months after 3 years of inaction. So I'm quite hopeful that budget may be a lot more responsible. While more or less people know that this year's fiscal deficit will be, revised estimate will be likely to be 5.3%, although as of now the math indicates more like 5.6. But if finance minister has indicated, then we have to give credence to his word, and also the way the accounting or the numbers will be presented. And next year will be 4.8%. But more important will be how realistic revenue and cost assumptions are. I think that's what investors, and more importantly foreign investors, will look at. Whether they are realistic enough or they are just making things look like the way it should be.
And then your strategy report is making a case that the thunder is already out.
Yeah, see, the finance minister has made a lot of promises, and he's almost sort of acted almost as the mouthpiece of what the prime minister should be doing. So in a sense, all the actions of the cabinet ministers working together in unison, which was missing before he joined, it seems that has started. So a lot of it depends on what he does after the budget. To give you a couple of these things, one is we have a problem of the current account deficit. Second is that apart from capex, even consumption has been cracking. So what he needs to do in step one is in terms of the current account deficit. That means he has to keep the money flowing in from foreign inflows. There is not too much he can do about capex in the immediate term. He can probably do, and that's not his job. The Prime Minister and the Cabinet can come together and in a coordinated fashion look after the clearances and so on. But that's post-budget in terms of power, coal, and everything else that's required. So one is he has to keep the confidence high to get the foreign inflows in, because the timing is good in terms of India being one-eyed in the land of the blind, etc., etc. Second is in terms of consumption. And we've just released another report which talks about how there's a massive spend from the poll elections. It's about $8 billion that we've estimated of poll election spend over the next 12 to 14 months out of the bunching of the state elections as well as the national elections. So I think that and the direct cash transfers, if it's successful, I think all that we should be able to raise consumption.
Well, what exactly should the finance minister prioritize, inflation or growth?
At this point in time, clearly growth. And he has to get RBI into confidence, because you can't have a chariot in which two wheels move in different directions. It won't achieve any purpose, neither growth nor inflation. But at this point in time, I think growth is the key requirement, because see, in our central bank numbers and the data which is given out, they don't track employment numbers, which is very important for a country like ours. And in case of inflation, it's more driven by supply side constraint and items like food and fuel, which are beyond the control of monetary policy in any case. And if you don't focus on growth now, when industrial IIP number has come down to such abysmal levels, then things can really become very bad.
Jyoti, what is your understanding?
See, obviously what you want is growth. And somewhere the growth won't come unless we have inflation under control. But there are times where you have to take a bit of risk on inflation and say, okay, can I get growth coming in spite of inflation being high short term? So, it's like a balancing act. And like the finance minister himself said when he was with us in Singapore, I always try to get growth first and look at inflation second. RBI's job is to look at inflation first and growth second.
What can he do to kickstart the economy? What can he do to kickstart the investment cycle? Like Nandan pointed out, as of now, at the current juncture, given the kind of environment we are in and the fact that there are political compulsions also, the options are limited.
If you think of kickstarting the investment cycle, there are three parts who can do it. One is the private sector. So a lot of that is probably outside the budget. Maybe he wants to give a bit of, tax sops to them. But a lot of the problems are not so much tax sops, but, regulatory issues, which they are trying to do outside the budget by, the CCI and giving regulatory clearances faster. The second is the government. Now, he does not have the luxury of the fiscal deficit to go and spend himself through the government budget to go and kickstart. And the third one, which he's focusing on now, is the public sector. So public sector, there are lots of public sector which are cash rich, which have investment projects. So he's trying to get them to start spending their money faster. But just remember, once a project is approved and people start spending, it takes 18 months before the bulk of the spending happens. So there's only so much you can do. What you can do is ensure that the order book has started to pick up, project clearances have come through, and so projects are starting. Probably the impact of that in numbers will take 4 quarters to 6 quarters to come.
Nandan, what about the political compulsions? How do you think finance minister can balance them? We got 4 elections or 4 state elections later this year, followed by the general election in middle of next year.
So I think the tool is using the direct cash transfers. He's also committed that he will that he has talked to the state ministers, and therefore he will be able to give some direction to GST over the next few months. So the question is that while there are political compulsions, he can, if he wants to, keep the borrowing level, the total borrowing level for next year under 4 trillion. I think that's sort of a benchmark that everybody will look at. If he can do that, I think the crowding out will stop. It will become easier for the RBI. It will become easier for the currency. So I think things will look better.
Do you expect a post-budget rally, Nirmal?
Very difficult to say actually, but quite possible, because finance minister is quite capital market savvy, and he believes that we need a vibrant stock market for everything, whether it's a sentiment or a disinvestment or getting our current account deficit under control through flow of capital. So once he's committed, then the odds are in favor of a rally afterwards rather than not.
So do you think budget is more like a policy statement? It is just a 100-point Nifty event. On the budget day, we could see a 100-point swing on the Nifty. We could see a lot of back and forth action in individual stocks. But budget is on Thursday. Friday morning when markets will open, do you think it will be back to square one, which is markets will once again focus on global cues and liquidity?
Budget in some sense has become much lower in importance than it used to be. So we'll probably come to a situation 10 years later where we won't even bother that the budget is coming, because a lot of the reforms happen outside the budget. So it's not like, reforms. There used to be a time where budget was like all the reforms will get announced there. So in some sense, the finance minister laid out his reform agenda in October itself. So budget will be probably one more event and one more milestone in that. The other thing is, people used to be very worried about tax changes, which used to change, the dynamics of industry, profitability of industry. That again is reducing in importance because ultimately tax rates have been quite stable for the last few years. So I think, a lot of other factors will continue to be important for the market. Where are rates going? Are we seeing any change in the economy? And of course, where the globe is going.
Nandan, is that your understanding as well? That yes, budget is important, but it is more like a 100-point Nifty event?
No, I would disagree with that. In a general sense, that is right, because the more inefficient the country, the more important the budget is. So obviously, over a period of time, it gets more and more efficient, then the budget becomes less and less important in that sense. But this time, the non-negativity of the budget, I think, will be very important. But he has to give a clear direction on three things. One is stability. Number two is that the borrowings number will be curtailed. And within the borrowings number also, so far, whatever is curtailed has been things like, roads, ports, defense, stuff like that. A lot of capex has been curtailed. Revenue has not been, your expenditure, revenue expenditure has not been curtailed. So he'll have to give some direction on that. And finally, he has to be the mouthpiece of the entire cabinet in terms of the intent on reforms.
Nirmal, let me flip my question now. What to your mind could really spook the markets?
I think there are quite a few things that can. One is the tax on dividend, because there's a temptation for them thinking that the dividend go to super rich. But they forget one or two things. One is it's already paid out of fully profit, which is tax paid profit. More importantly, most of the promoters get the larger dividend. And when you increase it beyond a point, then there'll be a tendency not to give dividend, but there are other ways to sell your shares and buy it in preferential or whatever. And this will impact smaller shareholders because the decision takers are the large shareholders who have a larger chunk of dividend. So you may say that I won't charge tax less than say 20 lakh rupees. But he won't get dividend only because the bigger guy is deciding how much dividend to pay. Similarly, the commodity transaction tax also can again impact the volumes. Also, increase in taxation, which can be a very is a threatening thing. Also, the populist thing, like if he succumbs under pressure of elections and does something like farm loan waiver or subsidy or some more bigger scheme, food security or things like that, then people really get scared about fiscal deficit. So these are certain pressures which can come from various political quarters, and one doesn't know. If it happens on budget day, then I think market is very fragile. We should not forget that. Because all run by FI money. If there's $1 billion or $2 billion of FI selling, there are no buyers in the market. It'll fall like a pack of cards.
Jyoti, since you interact with global clients, what is your understanding? What could really spook the financial investor or the FII?
Finally, now everybody is expecting fiscal deficit to be 4.8 for next year. If those numbers are not credible and that 4.8 just seems to be based on some very, very optimistic revenue outlook, which most people think are not coming, then people will get scared that, okay, this 4.8 is not coming. Only one thing to remember, so far Chidambaram has presented 6 budgets, and in 4 of them he's met his fiscal deficit target. He's missed in 2, including one was the Lehman crisis. So far his credibility should be high based on his past track record.
But he also has this innovation habit. He's also known for his financial engineering. So would you say with this budget also focus on the fine print? The devil is always in the detail.
Yeah, but I think hopefully now all this below the line which they had done is gone above the line, because everybody started including that above the line anyway. So there's a time when you did some things below the line and people were ignoring that, but now everybody includes that. So that whole need to do it or trying to show a lower fiscal deficit by bringing something below the line are not useful, because people just don't acknowledge it below the line.
Nandan, what about the tax part? What do you think the finance minister could do or will do in order to protect the existing tax base, and what can he do to increase the existing tax base?
He's going to try and widen the tax base as much as possible. That's obvious. He might also increase 5% duty, bring back the duty on crude. The danger is whether he's going to increase excise duty across the board by a large amount or only specifically on certain items. That is still not known.
So what are markets factoring in?
I think people are expecting some amount of excise duty increase in cigarettes, which is the usual target. It's maybe on cars, but on diesel cars and in autos and so on, it may not be so. The thinking is that he's already anyway deregulated diesel, so he may not. So those are the things he can do. On the other side, what he can do is basically give increased exemptions on the middle class, because he has to boost consumption.
And then is the disinvestment target of FY14 extremely important, because that in a sense will tell us how much of fresh government paper supply will hit market in next financial year?
So far the government's been fairly pragmatic about the pricing, as you're aware. So I think while a lot depends on what the external environment is, I think it's fairly pragmatic, and I think it's possible. But the other things, like for example telecom auction and so on, are also important.
Jyoti, the finance minister was in Mumbai 2 weeks ago, and he made an interesting point, and he made a point on equities, and he clearly is of the view that he will do something special for equity investors. What special can he do for equity investors?
See, one of the biggest hopes earlier was the removal of capital gains on short term for equities.
That'll be a stretch.
Because, see, that's what the Shom committee had recommended. If you look at it purely logically, it has two advantages. You increase STT, your collections will go up actually, because STT is something you collect at source and you get it whether there's capital gains or not. The other is it sorts a lot of the issues about Mauritius and tax havens for the FIS. I think the only worry he has in doing this is he does not want to narrow his tax base. So I think
he has to protect the tax.
He has to protect the tax base, and by doing this, he may put a lot of people outside the tax base, because there are lots of people who have only equities as a source of income. So I think that's his hesitancy, not so much the revenue consideration in doing it. The second is, there's this Rajiv Gandhi equity scheme, which probably will widen, and maybe that's something he'll use to, get in more money into equities. He'll probably make the scheme a bit more practical and maybe increase the scope of that.
Then let's also address the other part, which is the GST part. Do you think any communication on GST, markets would like to take that communication with a pinch of salt?
Unless he actually commits to a plan and he has the concurrence of the states, because I don't think the main political parties, none of them are against GST. It's just a question of matching the various demands. So if you look at the last 10-15 years of reforms also, you'll see that the reforms which have succeeded are those where the states and the center have worked together in consonance. So whichever party comes to power, these things will continue to happen and roll. It's just that you need a consensus to make it happen.
Is that your understanding as well, Nirmal? That don't take GST or the communication on GST at face value, understand the political setup, and the political setup currently is indicating and suggesting that it will be a while before GST rollout will be possible.
Yeah, that is true. That everybody knows. Nobody is expecting the GST rollout will happen in this budget. But there are several steps that can be taken towards GST, which is a rationalization of tax structure, the items which are out of tax, particularly service tax, and bringing the homogeneous or the few slabs of tax. And I think how we get the formula right, so that there's an incentive for states that get part of this, and there are states who are still acting funny or tough, how they are excluded from this. I think that will be the key. And even if we make certain things which are very decisive moving towards GST next year, that will be taken as positive. But GST is one small thing in the overall scheme of things. It doesn't impact directly either earnings or market at this point in time. It's a very important reform, but it, along with others, will be seen as a positive thing. By itself, GST won't be the game changer.
Let's construct a scenario. A good budget, what happens to market? A reasonable budget, what happens to markets?
Yeah, I guess we have to define what good and reasonable is, because you could go to any level, or extraordinary budget where you get a short-term capital gains tax being removed.
That's a dream budget.
Could be like a dream budget.
So I'm using reasonable budget.
Yeah, so I think a reasonable budget, basically, as long as you get the economy moving ahead. This is the year where, your base numbers will start throwing up. So in that sense, we have some very easy comps through the year. We will get a mild recovery. The issue is how, much the recovery is. Same thing for earnings, like you have margins which are at 10-year lows. So hopefully at some point margins won't fall more than this, and you'll get some recovery in earnings coming through. So, you have markets which probably will do slightly better over the course of the year. And if the budget helps that process, that's something which will just keep taking the market up a bit.
And if the budget is bad?
Say that if we get lots of taxes and we get something which is not credible, then we've seen India do very well over the last 1 year. So that, just remember, the big problem with the market is positioning and performance. India was one of the best performing markets last year. India started last year with, everyone being underweight and negative on India. Same time this year, everybody's positive on India, most foreigners are overweight. So now the margin for error comes down. The margin for error was very low last year.
So broadly, Nandan, the bottom line here is that this budget is all about expectation management. It is all about hope management.
I would actually say that this time's budget is likely to take everybody with a positive surprise. Because if it doesn't, that means whatever Mr. Chidambaram has done in the last 5 months or whatever, it belies everything. So I think what's more important than the budget itself is what happens during the state elections over the next 4-5 months, and how the cabinet and the Parliament act and get through the things which are required. As my colleague said, GST, FDI, all that is fine. But what about what's happening now in terms of consumption, which is cracked, in terms of capex, which is cracked? Those things require the government to act, and that's the urgent measures. So budget, I think, would be not only non-negative, in my view, is likely to be better than expectations, because what the finance minister is likely to do is give some sops to the capital markets, so that he can in this very dangerous sort of fragile environment, as I put it, to be able to continue to attract foreign inflows is extremely important for us. So I think it will be positive. And after that is the question.
So the need of the hour, Nirmal, is to attract global liquidity, stabilize your current account deficit, and manage your fisc.
Yeah, to reduce your current account deficit, because it has to go down, it can't remain at these levels, and make sure that the feel-good factor and positive sentiment continues.
And then do you think the biggest risk this time around could be the assumption that things have improved and things will improve going forward?
Anything could happen in the external world. Says what Jyoti says is right. And for example, crude. If there's no circuit on crude, so it's gone up like $1 a day almost. Yeah, it's now 120.
That's the biggest risk.
As an example, but our in-house feel is also that with the US sort of withdrawing from the Middle East, there must be some backdoor negotiations which should continue now between Iran and US. So that should take off the premium. But the way the world growth is sort of recovering beyond what we expected last year, crude is rising. So there could be inflation, and therefore choosing companies which can pass on in nominal terms is, I think, fairly important, choosing the right companies.
Give me 3 key monitorables from the budget.
As I said before, one is what is the final borrowing number? Okay. Number 2, how is that going to be achieved? Is he going to cut capex, or is he going to how much is he going to cut in terms of his revenue expenditure? And number 3 is what he can do for raising consumption.
Nirmal, your 3 key most important monitorables from the budget.
I think fiscal deficit, then the steps towards cutting down subsidies and non-planned expenditure, and third is what he does to spur the investment.
Jyoti, everyone has given me 3. You want to give me 4.
Fiscal deficit and the how of the fiscal deficit is like probably the most important. So in the
how, only one monitorable.
Okay, so in the how, what comes is the subsidy.
Okay.
In the how, what comes is the capex part. So in some sense, the whole discussion we've had, it's do you cut subsidy? Do you provide enough money for capex? And do you give enough incentives to make sure that everybody else is willing to
budget,
spend?
No budget, where are markets headed next 6 months?
See, my view is that market this year will give a return which is like 8 to 10% from the current
That's levels. A conservative number?
Not really, I don't know. It's my number, I don't change my number very often.
Nirmal, budget, no budget, where are markets headed?
I think I'm more optimistic than Jyoti. I'll look at 15% return in this year, 15 to 18%.
You want to meet Nirmal on the expectation number?
If inflation goes where it goes, the number goes higher and higher, basically. So it depends on what's your view in inflation. I think the external environment is far more important, and I think one should also look at a lot of non-nifty stocks, because in non-nifty stocks, there are valuations, and if you choose them carefully, cash rich, debt free, etc., that will be useful to check, because Nifty as a whole, there are questions on. Which is why we released a report last month, which is specifically said these are the 8 nifty high risk reward bets.
So for 2013, are you bullish? Are you cautiously bullish? Are you optimistic?
We're always bullish on the stocks that you can pick and make money on, because you can't buy. I mean, people don't buy the index.
Nirmal, for 2013, bullish, bearish, optimistic?
I'm optimistic.
Jyoti? If with 8% you're not bullish.
Okay, so cautiously optimistic, whatever it means.
All right, gentlemen, good luck. We leave it there. Thank you for joining us.
Thank you.
That's it on this special edition of What Markets Want from Budget. I'm Nikunj Dalmia signing off. Thank you for watching the show.